Good evening, everybody. It is indeed 6 p.m. and welcome. It is February the 5th, and we are here for the How or clinic session, however you want to call it. How to and the clinic. Now, many of you probably don't know today in Ireland is a public holiday. So it's a public holiday, and I'm busy idling as you do, as a trader, as you do. As traders, though, we are paid, if you like, or rewarded, if you prefer, with a win for following the signs. When to trade, then, a simple checklist, maybe. Hi, Ben. I sort of wrote this down, but it could probably be put in a fault finding chart quickly and easily enough. What I'll do is I'll put it in the description on the YouTube video and you'll be able to follow it there. I think that will be the best place and the best thing. Ideally won't be a very long one because, as I've said, it is a public holiday here in Ireland, and usually if it's a public holiday anywhere, I take the day off, and I mean anywhere. Japan, Australia, Russia, New Zealand, I don't care. If someone's off, I'm having it. So, a simple checklist. First question: am I in the right state of mind? And that's it. That's a simple question. Then you can move on and you can say, I'm in the right state of mind, and there's a signal. Great. Step 2. It fits into my plan. Great. Step 3. Step 4. Take the trade. Step 5. Follow the signs and reflect. I'm not in the right state of mind. Reflect. Don't trade, just reflect. I'm in the right state of mind, and then there's a signal that does not fit into my plan. Don't take the trade. Reflect on why. What's the action? And decide afterwards, were you correct or were you not correct? I would imagine if it doesn't fit into your plan, regardless of whether the trade goes to an anticipated target, you did the right thing. Next on the checklist, I'm in the right state of mind and there's no signal. Don't trade. Reflect on the fact that you didn't trade and you didn't get caught out. And then a completely random question came to me from outside our group here. Someone asked, so I thought it good, and I'll run it past you all here. Basically, how does one get better at taking punches in the face in the moment of being punched in the face? It went on. This is where the majority of his mistakes happen. So he's saying, I get a punch in the face and then I make a mistake and I'll get another punch in the face and I'll make a bigger or yet more mistakes. I hear that, I understand it, I get it, and I'd like to suggest that we can improve our ability in a demo account first. That way, we enter the market with a higher level of ability, we can see the higher probability, and we enter the market with a higher level of confidence. We can improve our ability to spot divergence, the early warning system for an exit strategy, or advising us to lock in something. We can allow for trend, and we can focus on as few indicators as is sensible for our own personal needs, allowing us a clearer vision of our targets. We can follow a process regardless of our feelings and emotions. In fairness, many of us came here from jobs we loathed or at least were unsatisfied by. So we can sit here bored and wait for a sensible setup that does fit into our plan. We can ideally maintain our mindset whilst sitting waiting for the trade that does fit into our plan. Well, can you? Will you? That is what it takes. That really is all it takes. That's it. We just need to wait for our setup and follow our plan. And I think last week was a very good example, as was the week before, of us waiting for our desired, required setup, seeing it happen, and allowing trades that were not within the realms of our setup to pass us by without getting anxious, involved, stressed, or worried. We waited for exactly the right things, we waited for exactly the right moment, and we took, ideally, exactly the right trades. Now we're still seeing NAS faff around here at 17.6, 640 it's been up to, so we are still somewhat short of my 17.711, so it would possibly do no harm to have a quick look at the daily and the 4-hourly, our long range forecasting tool. And what we're seeing here is the potential for an M on both the daily and on the 4-hourly. We've got this L of a double top across here, an X or an X, A, B, C. Now that brings us very nicely to a D leg of a W, and we can see it on the 4-hourly, and it's probably from here really, but we've got an X, A, B, potential for a C, in as much the same way as we had that bit of a W that we looked at last week, X, A, B, C, W, the run up, I think it was during last week. Now we have an inside bar here on the 4-hour, we have an inside bar on the daily. There's only 5 or nearly 6 hours left on this day, and it's already a low test bar. This one's a very bullish inside bar. So what we'd be looking at for our morning session tomorrow is a breakout above this high. Let's just put we'll use this one. We'll put a measure on here and we'll line up that high as being 658. 658. How high have we been? Well, we've been as high as 689, maybe 690, and there's a double top there. That really is just, was it 21 pips short of our target? So if we put him on our overall target, I'm close enough there. There you go, 711. How far away are we? We are approximately 85 pips. Okay, I'm happy to wait. I'm happy to watch. I would like to see it hit. It's not a necessity because we have strategies that tell us what to do. And if we follow them on balance of probability, we'll be right more often than we're wrong, in exactly the same way as we have 4 options from our entries: a small loss, a break even, a small gain, or a big gain. Those are really the only 4 options we have. Now we did see somebody last week, or we is it observed, listened to? Remember, somebody was telling us, I took 1 pip, I took 2 pips in one of the sessions, and I asked, was your stop loss 2 or 4 pips? And obviously it wasn't, but somebody was getting a bit itchy with the out finger there, and probably not really paying attention to the charts. You should remember that in your daily trading plan, one of the lines you are not allowed to edit states clearly, watch your charts, not your balance. That would be very helpful if only it could be applied by everybody. That's the reality. Watch your charts, not your balance. It is one of the rules in the daily trading plan. Now, we're 9 minutes in. I'll ask, has anybody any questions on tonight's topic? And if not, again, oh, there you go. David says, could you please tell me the settings of red light, green light? I can, of course, David. This one you'll find freely available on the internet. I put it on Baby Pips, and I think I put it on Forex Strategies Revealed as well. The two of note, it's a 13 DMI with just the DI positive and the DI negative visible. DI positive green green, DI negative red red. And again, for a buy, we need DI positive to be up above DI negative, so green above red, and ideally above the level of 21. We also need price to be above this 13 period EMA. I believe it's you, isn't it? Yeah, there you go, 13 period EMA, green uptrend, red downtrend, and ideally this is something you could use that closed bar to closed bar exercise on David. So if we put him back on, you could see that would be a sensible and effective long closed bar. We do close below the green line, which is red there, so you'd want to be pulling the plug, and you'd be pulling the plug after 37 minutes for 39.7 pips. That's the reality. You can also see the green line dropping below the 21 level, and you might decide you want the round 40 and pull out, as that is an option as well. Then you've got a break back above and a close back above. He's the close above. He's not quite the break above, notwithstanding, you know, there is your reason to exit. That's it. If we look for the sell, it's over there where we break below the 13 EMA, and we've got red above green. You can see one of our pivots there off at the pink line, David. Notwithstanding that, you're out there for, well, you've covered the spread. You might have 2 pips in it. Again, that's one of our small gains. That's one of our bigger gains. And there's no doubt on here somewhere, this one here is no doubt a small loss. Let's have a quick look at it to see. The close below is him, but he hasn't gone there. He's the close below is him. So quite a late entry, if you ask me. Notwithstanding that, there would be your closed bar exit. 16 pips, quite a biggie that one really. It is what it is. For me, going above the line would do it, but you all know me, I'm a very, very serious tight git. We can see green above red there, so we could argue that that's your pigeon, maybe somewhere in there. It could be. Nevertheless, on balance of probability, if you scroll through the day, you will see there are some big winners, there are some small winners, and there are some small losers as well. That's the reality. But 13 DMI, 13 EMA, and then I've got the standard full suite of higher value EMAs on there, because pivots are still a thing. And look how we struggled along the maroon and the bronze line there, and then we try and break below orange. We can't. What was resistance becomes support, and we're fired off up again towards one of our invisible levels, the 640, which we're on our way back to right now. Happy days. You all right with that, David? Hi, Paul. I haven't used it yet, Paul. 14's not a fib number, so I've never bothered with it. But you know me, if it's not a fib number, I'm probably not going to test it. If you change it to a 13, I'd probably not disagree. There's an 8. If we go in there and have a look at a 13, I just, you know, what's the word I'm looking for? It would beat me up to use a 14, I think. Just my own mindset. There you go, good to go. There's a dip below, but close below, so good to go. Yeah, I'm not against it. I just still like my my 8. As you can see, David, I made it invisible for the session, but I believe I've made it public enough on many of these sessions. Let's just do an 8 and flick the 2. See, there's very little in the difference. You're still in a similar place, you're still out in a similar place. There's very little between an 8 and a 13. Let's just have a look at this where it's rangy, where you've got potential for a long and potential for a short. If you go 13, I imagine it takes that away, and indeed it does. So there you go. I'd give you the 30. There'd be no difference between that and a 14, Paul, in fairness. Look, 14, there's just very, very, very little difference in that at all. But 13 is a fib number. I'd be morally wrong if I started suddenly using numbers that were not fib related. So I give you a 13, nothing wrong with it. It does clear out some of the range, but when you're in a rangy bit, you're still going to take losses, be it 13, 8, 14, 21, doesn't matter. You're still going to take on the chin some of those ugly trades. Anyone who ever tells you that there's I've got this strategy and it's 100% win rate, you know, you need to run a mile or 2, 5 if you can. I've probably ran 5 miles in my life. You never know. Not recently. Go on. If there's any more questions first. I'm not going to end it right away unless there's no more questions. I'll upload it to YouTube as quickly as I possibly can. Then going Oh, cheers, Ben. Okay, no more questions. I'll end the recording with a please trade safe, everybody, and I'll see you on the live session in the morning. Thank you.